Hello and welcome to the presentation on Bardoc Gold. We're developing a gold project in a Tier 1 mining jurisdiction of Kalgoorlie, Boulder. We've got over 3 million ounces of resource and our DFS is on track for release at the start of next year. We're targeting 135,000 ounces annual production at an all-in sustaining cost of $1,220 an ounce, which shows there is exceptional margins to be made at the current gold price. We're in a Tier 1 mining jurisdiction, Kalgoorlie, Boulder, and there is no better place to be building a gold mine. We're located 40 kilometres north of the town, which has everything you need to commence a mining operation. We've got 3 million ounces of resource and 800,000 ounces of mining reserve. We're targeting 135,000 ounces per annum annual production from a 1.8 million tonne per annum processing plant over a period of 7.8 years. We've got strong margins and low capital intensity with Australian dollars, $1,220 an ounce of all-in sustaining costs and a capital component of $140 million. We've got $35 million cash in the bank at present, which shows that we've got the ability to get all the way through to our final investment decision, as well as having money available to start early stage works for building the project. We're closing in on rapid development and production with Q3 next year target as a start of construction. We've got an experienced management team within the Kalgoorlie region, as well as having the board experience of taking junior developers all the way through their feasibility phase and financing and into construction. We now have a strong institutional holding on the register, with a number of people coming on board in the last equity raising to really follow the project and begin to be that transition of changing the register from a retail holding into a more institutionalised focus. The board and management team, led by the team from Pilbara Minerals, Tony Leibowitz, John Young and Neil Biddle, have tremendous amounts of experience in taking junior developers all the way through the process of financing and construction. Rowan Johnson's a mining engineer with a strong technical background of turning around struggling operations. And at an executive level, we've now built out the team to include a lot of Kalgoorlie-centric mining experience. Myself, I've got over 17 years of experience of living and working in Kalgoorlie, Boulder, and I know the area well. Our study manager, Andrew Francis, has worked at multiple mines in and around Kalgoorlie and with a strong background in running successful operations as well as running successful studies. Helen Chernoff is an environmental stakeholder manager with over 17 years of experience in getting mining operations approved and underway in Kalgoorlie, as well as dealing with native title and stakeholder engagement issues. Bradley Toms is our exploration manager with over 30 years of experience in the Goldfields, and he's been instrumental in the discovery of our 3 million ounce resource base. And 2020 has been a transformational year for Bardoc. Our PFS was completed in March, so that really does show that this is one of the best undeveloped gold projects in Western Australia. We completed our institutional capital raising. That now means we're fully funded all the way through to our final investment decision, as well as having capital available to start any pre-production works to accelerate the project. And there's no better place to be building a gold mine. Located 40 kilometres north of Kalgoorlie, Boulder, it's close to road, rail, power, infrastructure, as well as having a locally based workforce. It's a Tier 1 mining jurisdiction, and until 2018, these were a series of small projects that really didn't have the scalability to be able to do anything in their own right. In 2017, Spitfire Materials merged with Aphrodite Gold, and that gave the company around 1.4 million ounces of resource. Then Excelsior and Spitfire merged in 2018. That brought together really two projects that were going through pre-feasibility studies, but didn't have the scalability to build a standalone project in their own right. Bringing those two projects together gave the company about 2.5 million ounces of resource and really the potential and scalability to take a holistic approach and strategic approach to project development and exploration within the area. And throughout 2019, we've looked at low-cost complementary acquisitions that have not only added to the resource base, but through exploration, we have grown that resource base out to 3 million ounces. The project itself is a 7.8 year mine life and pre-production capital of about $140 million. All-in sustaining costs at $1,220 an ounce, there's significant margins to be made at the current gold price. With over 800,000 ounces of indicated material on a plan and 790,000 ounces of mining reserve, it's a high confidence mine plan. And it has the ability to really support a debt equity ratio of 60% debt to 40% equity, and really be able to have strong margins throughout the project life. The processing flow sheet is fairly straightforward. We've got a SAG ball mill configuration with CIL tanks, as well as a flotation circuit for the sulfide ore. And of the sulfide ore, about 50% of our production profile will be golden concentrate. The reason why looking at a golden concentrate is, rather than focusing on what is a high capital risk and potentially a high technical risk solution, like a Bardoc or Albion process or POX process, there is strong demand for gold concentrates on the open market. And there isn't a new theory. There is many companies in Western Australia, as well as in overseas, already conducting a number of offtakes. Silver Lake Resources, their Deflector gold mine in Western Australia, shows that locally it can be done. And when we start having a look at with large companies overseas, you've got your Dundee Precious Metals and London Gold, so multi-billion-dollar companies who are also producing gold in concentrate. And the financial metrics of the project cannot be ignored. At current gold price around $2,600, $2,700 an ounce, the project will have a post-tax NPV of about $500 million and IRRs of over 50%. So the project does provide a compelling investment case in a rising gold market. We've got open pit mining reserves of 420,000 ounces with an immense potential to grow. We have a look at Zoroastrian and we see some of the optimizations that can significantly add to the open pit reserve at the project. And similarly at Aphrodite, where we've seen not only the Alpha Lode open pit optimized with a bigger cutback, but also a new open pit opening up at Sigma, which presents the next level of exploration targeting at the project. We've got underground mining reserves of 370,000 ounces. The bulk of that's at Aphrodite, which is a beautiful ore body, 7 to 30 meters wide, vertical ore zone. It's got 5 to 6 years mine life at the moment, and in our assumption, it will continue. There's open along strike at depth. There's a lot of exploration potential at Aphrodite. We think we're only just scratching the surface here. So this won't just be a 5 to 6 year mine life project. I think this will be a 10 to 15 year project longer term. Zoroastrian underground, we've only got a small mining reserve there, about 80,000 ounces. However, we've probably got about the same amount in an inferred mining inventory. When we have a look at the project and the drilling results we've had to date, we expect to see a significant reserve upgrade at Zoroastrian with the successful drilling results we've been achieving. Our project implementation plan is straightforward. We'll have a resource update at the end of September. That's primarily focused on increasing the confidence within the resource. We'll have our offtake arrangement in place by the end of Q4, and we'll have a look at feeding all that work into our definitive feasibility study, March quarter 2021. Environmental permitting, we don't see any major issues. Everything's on granted mining tenure, and we've already commenced a lot of the discussions with native title groups. The debt and equity funding, the next part, will begin discussions with banks over the coming months to really focus on getting everything in line before the release of the PFS in the March quarter. We're still targeting project construction to commence in the September quarter next year, and open pit mining will commence at the same time. There is significant exploration upside at Bardoc. We have a plan at the moment to drill 40,000 meters and $5 million worth of expenditure within the project, targeting new 100,000 ounce plus discoveries. When we have a look at the potential of the area, there hasn't been any significant drilling campaigns conducted over the area for the last 10 to 20 years. So we see that there's a lot of potential here within our deposits, and we've lined up a significant program to begin targeting. As a summary, the key reasons to invest in Bardoc is we are in a strategic land holding area. 40 k's north of Kalgoorlie, there is no better place to build a gold mine. We've got a large and growing resource base for both greenfields and brownfields opportunities. With 800,000 ounces of mining reserve, and we'll look to push that as much of that 1 million ounce production target into mining reserve as part of our definitive feasibility study. And we've also got a strong board and management team who not only have got the experience in taking a project all the way through from feasibility into financing to construction, but we've also got this team on board who have run successful mining operations within the Kalgoorlie region over a number of years. Thank you very much for your time today, and I'll look forward to presenting at the 121 conference further later this year. Thank you.